So it's a very exciting day for SHAF Afrique. We wish to welcome our guests from Mixta, Nigeria. It's one of our flagship clients under the new relaunched intervention in Nigeria in the housing sector. So we're really very happy to receive the mission from SHAF Afrique, led by the CFO Benson. They are partners. We regard our clients as partners first and foremost. So we're very happy for them to have taken their busy time to come and visit us. Basically to renew the friendship and also the relationship. And most important, to basically close the deals which are under consideration and open for more avenues. So feel very free. This is your home. And you know the commitment process of a loan. They're haggling, quarreling. Sometimes you wonder whether you're close, but we close. Well, here we are, we close. So this is a happy occasion to sign off, signify the sign off, and look for other deals.
We regard SHAF as a strategic partner to Mr. When Mr. decides to work with strategic partners, they are strategic, so we stay with them. It's not a transaction, it's a relationship for us. And so we want to thank you. We're going to start by thanking the board of SHAF for the leadership, and then for considering Mr. a worthy partners to SHAF. We want to thank you, my MD, Kingsley, I call you. We want to thank you for all of the support. I think, I don't know whether you or whether any of your team members have been to Lagos as frequently as you've been on the Mr. transaction. so we're grateful for all of the commitment to getting the job done, for deciding very early that, look, this is a transaction that we must do. And beyond that, so we're focused on that, and we're signing for Nigeria today. But we're also grateful for all of the assistance that we are doing for the other subsidiaries of Mr. In between those two transactions, we were delivering more than 2,000 homes to people. And if you multiply that by 4, we know how many people we have solved their housing needs. And then not just that, if you consider that each home that is built provides 3 permanent jobs and so many other informal jobs, then we have to understand the impact of what we're trying to do here. So we thank you, SHAF, for the opportunity. We are grateful for this. We wish for many more, not because we are Oliver Twisted, but because we know that is what is good for all of us.
Okay. And then we shall exchange, the documents. No, I didn't check. Good.
Okay.
We advanced more than $50 million. Where is this money coming from? It's from the bond and so on. So yes, I can confirm. You recall that earlier this year, end of April, we issued $100 million Naira equivalent in Nigeria as part of the established $500 million Naira equivalent MTN, medium term note program. So that bond is subject to issue in tranches or series. So we had series 1. Series 1 was finally issued in April, end of April. So we expected about $100 million from that bond, but oversubscribed in Naira terms by 60%. So we drew 110 million Naira equivalent dollar, so which is about more than 40 billion of Naira, about 44 billion. So yes, the money advance to the 2 projects so far already paid out, disbursed. Landmark and Mixta came from that proceeds of the bond. Why? Simple. We are trying to mitigate the issue of foreign currency risk. Mixta, Landmark, they are based in Nigeria, so the base currency for them and ourselves is actually to use the local currency. Then you mitigate the issue of foreign exchange risk, because the proceeds are, in terms of for us, they are raised in Naira. Our clients, dear clients, they also be able to base in Naira to their contractors and so on, some imports as well. But most important, the offtake, they'll be paying Naira. So you resolve the currency issue. Because if you don't, most of our currency against the dollar, you know what has happened even now globally. Look at home here in Kenya. We began the year around below 120. Now it's almost 123. That means that if you sustain that kind of slide in local currency, you have to repay foreign loan. It's not a good risk. So that's what we resolved there. We had a natural hedge. So the money, 50 million, so far disbursed to dollar in dollar terms to Mixta, came from the bond proceeds. That's the answer. But however, I must actually put a caveat here. For Mixta, they are basically called Mixta Africa. Nigeria is just the headquarters. They have got a presence in Senegal, Ivory Coast, as well as Morocco. So there's another ticket in dollar terms, actually going in dollar, about 6 million initially going to Morocco and Senegal and whatever. So that one for the dollar component is from our own capital resources. It's not from the bond. That one's about to be disbursed hopefully this week. Yes, but for the current disbursement, it's from the Naira bond. I can confirm that. Now, is there increased activity in the Nigerian market? Yes. First of all, it's from a purely common sense perspective. Nigeria is the largest market in sub-Saharan Africa. Actually, the whole Africa is the largest economy. Depending the way the dollar moves against the local currency. 3 years ago, Nigeria was actually quantified, the Nigerian economy was quantified at $500 billion. But because of the slide, it has removed back to about 350 billion. It is still the largest economy in Africa. Okay? So the GDP for Nigeria is more than 350 billion. It's still the largest. And also population, we know, is 200 million plus. We know that. Obviously, it's got also the highest deficit in affordable housing in Africa. I will not go into the specifics because that's contentious. My guest will tell you that in Nigeria, politicians have got their own figure, a lower figure. The market has got their own figure. So just for a flavor, it ranges from as low as, I was at the conference last week in Nigeria, some even said 2 million, but others were actually pointing 22 million. So let's just say there's a deficit, significant deficit in Nigeria. So therefore we need, and it's always growing, so we need to fill that gap as a development financial institution for Africa. So the activities in Nigeria, there is an opportunity, huge opportunity for any financial institution. I can tell you, we can bring World Bank, IFC, which does the private sector, our premier institution, African Development Bank, or other institutions. We will not be able to resolve the issue of meeting the gap in affordable housing. We all have to play a role. Now, for us, we're excited because we are set up by our countries specifically to resolve this issue of affordable housing. That's the space we play. And we cannot on ourselves fill the gap. So that's why we have to use all kinds of avenues. Capital from the shareholders, which by definition will not be sufficient, but we have to leverage on that and borrow. And that's why we have done that MTM note in Nigeria. So yes, just to confirm that Nigeria has got a huge opportunity. As I mentioned, are there plans to issue another bond? So we already have a program, MTN. It's for 3 years. So and remember, time flies. By April, the first year would have gone, which means we have headroom over 2 years to exhaust that. So out of the 500 million, or let me put it in Nigeria terms, 200 billion naira, we have only drawn 40 billion, meaning there's still 160 billion to be drawn. So the way we shall be doing the subsequent series will be, first of all, subject to availability of a bankable project pipeline. And the way we have done it is very deliberate. This money cannot go to any developer in Nigeria. No, we have carefully selected bankable projects. And I'm happy to report here that Mixta was the first to get the disbursement. Why? Mixta is a household name in Nigeria. They've got, credible corporate governance structure, international board of directors, qualified seasoned management team and experienced, and all structures are operational. On top of that, they have land banks in the all key cities of Nigeria, particularly Lagos, the commercial capital. So they are sitting on land banks, which all they are looking for is competitive financing to put up the developments, urban regeneration and mixed-use housing, for our people. And then the impact, which my valued client, Mixta, will talk to. So the opportunity is very huge. So meaning that after we exhaust Series 1, we shall go to Series 2. The quantum of Series 2 depends on the projects available. There are many projects, but we're very careful who gets that. For this one, Series 1, and I believe Series 2, we're going for top-tier developers and any eligible mortgage banks. So Mixta is a benchmark you have to meet. If you're a developer in Nigeria, you have to meet the benchmark of Mixta for you to be eligible for this kind of financing. So yes, subsequent issues will be done subject to that, a bit of a pipeline. And I'm sure my colleague here, Yanko, is busy looking at that pipeline. Now, other markets. We're in 44 countries. So by definition, we have what we call diversification of the portfolio. There's concentration risk, which every prudent financial institution has to address. Nigeria, for reasons I gave, is the largest market, but GDP, population, and by definition, it follows even the housing need. It's got the largest. The numbers are there. Numbers are there to point out. But we have to intervene in other markets as well, in the 44 countries. For some reason, and which is well known, you cannot be in each of the 44 countries because some markets are better served by the local institutions and private capital. I can give an example of Botswana. It's an investment-grade country. Mauritius, they are all our members. They are investment-grade countries. Those, to a certain extent, we may not intervene directly because the market failure may be resolved. By definition, a DFI, you intervene where there's market failure or where you need to make a market. And that's what we are doing. But sufficient to say all the 44 countries, the majority of them, more than 90%, there's a market need for it. So it's a question of us now putting what we call country strategy papers to be able to intervene to resolve the issue of affordable housing. As we see today, the deficit globally for Africa by Center for Affordable Housing Finance in South Africa has been put at 56 million housing units. Conservative figure, 56 million. If you quantify that in terms of monetary terms, we are looking for more than $1 trillion to resolve that. That's why I said no one financial institution can fulfill the needs. So other than Nigeria, we are moving to other key markets. Where we sit here, Kenya, our headquarters, It's also a huge market. In East Africa, it's the largest. It's the economic hub. It's got a GDP of more than 100 billion, as we see, about 110 billion now. In terms of Africa, I think they're about 5th or 6th largest economy. Nigeria, South Africa, Egypt, Cote d'Ivoire, and then Kenya. So Kenya is one of the top 5 biggest economies. So naturally, we have also to intervene in here. Now, as you know, for Kenya, it's very easy because, first of all, there's a policy framework we have to walk through. The previous government of His Excellency Uhuru Kenyatta, during the second term, 2017, he rolled out a very huge Big Four agenda, of which housing was a cornerstone. Actually, affordable housing was a cornerstone. Now, on a good note, the then Vice President, who is now the current President, Honorable Dr. William Ruto, has actually taken the issue of affordable housing at the centerpiece of his, government. And in that respect, what we have done so far in Kenya, given there's a clear policy framework, and there are so many projects which have been rolled out already by the State Department of Housing. So it's very easy for us to just engage and move on. Right now, I can confirm to you, we are doing a project in Pangani for 1 billion shilling. And the president has actually been mentioned to this. In that project, we are so happy to intervene because it's really affordable. There is a house there in Pangani, if you have time, you go there, which is going for 1 million shillings. 1 million shillings today, as we speak, in dollar terms, is about $7,500. Let's say a house, 1-bedroom house. Wow. 2-bedroom, about 2 million shillings, $15,000. That's affordable. You see? And for information, we are not leaping in the dark. We have a function here called Policy, Research and Partnership. That function, headed by Dr. Gambo, has defined what an affordable house is in each of our member countries. It's not one straight figure, it's a range. It's a range. So you can imagine, Pangani there's a house for 1 million shillings, 2 million shillings, 3.5 million shillings. And those are figures you say they're affordable. So, and we are participating in that pilot project where we have availed 1 billion, approved by the board. It's undergoing commitment. But over and above that, we now need to intervene further by cooperating with the National Housing Corporation of Kenya. There's a discussion going on so they can roll the houses throughout the country, which is what we are looking for. We're not just looking for housing in the commercial cities of Mombasa, Nairobi, Kisumu, or in case of Nigeria, you want in Lagos or Abuja. No, it has to be holistic in all the countries. So for Kenya, that's what I can tell you. We are in there. But other countries are also busy. Namibia, Yanko can explain to you, there's also affordable housing projects we have done there in Namibia. Then at DRC, the good thing, we're even doing urban regeneration. It's a mining company. Some of the towns there, like Lubumbashi, there's not much to talk about in terms of urbanization. So they need decent houses in there. So we have to meet the criteria as well. Urban, mixed use, commercial centers, as well as, So we are all in these countries. For Mixta Africa, Nigeria, largest component, but the other 6 million is actually going to Senegal. After that, Morocco. After that, Ivory Coast. Our goal is to reach all the countries. Where we cannot do the housing, we can raise the funding. The pension funds who are sitting huge amounts of money, they're able to invest in that bond and they earn a decent return. We want to do the same in Kenya. NSSF, is a very huge, pension fund. We want to take that liquidity, bring into housing. And the president actually, that's the way he's looking at, is increase the contribution so there's more capacity to actually provide the funding. So that's our approach, essentially, in terms of Uganda, we are also there. So basically, all our countries were very active, but we are beginning next year, we shall go through throttle by doing a country strategy paper for each country so that we demonstrate impact and relevancy. Zimbabwe, where we just had our AGM in July, we are very active there with the Honorable Minister Gare. Some projects were shown to us in Victoria Falls. The business team was there 2 weeks ago. A lot of projects. So our countries are not short of housing needs. They have their housing needs. It's for us to intervene meaningfully. Now, for the local currency, yes, you mentioned whether we have any plans Yes, we actually opened up negotiations with the Capital Market Authority of Kenya last year and this year. The good news is, unlike Nigeria, where it was the debut, the first time we issued the bond, in all the 40 years of South Africa, imagine, despite that it's the largest economy, and it follows even it's got the largest liquidity in all of pension fund managers and so on there. It is. If you look at the numbers, you can't beat Nigeria. GDP, population, housing needs, liquidity in local currency, pension funds, they are there. So we have tapped that. For Kenya, I think because of logistical reasons, having been here for 40 years and as the headquarters, it has received the largest number of local currency issues, more than 10. It goes back as well as the early 2000s. The last one was 2013, whereby we issued $50 million equivalent. And then it was about, when the shilling you put at 100, it was about 5 billion. Thereabout. All of them have been successfully retired, no default at all, demonstrating the high investment grade South Africa holds in terms of local currency issues. We are averaging more than AA in both Kenya and Nigeria in terms of local currency rating. So our risk is as good as sovereign, because by definition we're also a sovereign. So we are quite attractive to issue the East African market. So the way we shall approach it now, it won't just be for Kenya. It will be an East African issue. Meaning, we issue Kenyan shilling, subject to availability of the projects, Tanzanian shilling, Ugandan shilling, and Rwanda franc. These are the 4 countries. Burundi, South Sudan, they're also part of the East African community, but they're not very active monetary-wise in terms of, their markets are not deep in terms of capital markets. But these other 4, the capital markets are very active, with Kenya being the apex, for obvious reasons. It's the largest market. You know, it's GDP, population, or Tanzania may be slightly bigger, but Kenya is more, the capital market is more deep and broad, so therefore easy to issue. So the plan was to do a $500 million equivalent in local currencies for the East African. So we're calling it an African issue, so that we're not just specific to one country, you know. And that's why we look forward to a monetary union when all these countries will have one currency, like the CFA zone, the SHAF zone in West Africa, whereby again there we have done 5 issues of more than 70 million. Again, fully retired, repaid. So Nigeria actually, after restructuring the company, was the first door we knocked on for obvious reasons. We'll come back to East Africa, we go back to CFA zone. And for East Africa and CFA zone, we're not a new issuers, no. Nigeria, we are the first issue. It was the first time we issued. These 2 markets, we are known. So it's the question of just renewing our investor appetite and move on.
We are repeat clients. We've done a project that was about 600 homes. It's called Adiva. The loan was fully repaid in its term. But beyond that, I think the impact is that it's a burgeoning estate now. It's an estate where all the units were sold. Even afterwards, we had surplus in the project, which we applied to other projects. It was a highly impactful forerunner project for our land bank. And we have to thank Shelter for that assistance at the point when it was needed. And so it was a no-brainer for us to come back, given the success of that forerunner project. And so, so this will be like my 3rd trip to Shelter. We're here a few years back to try to repeat the same thing, to replicate the success of that financing. Unfortunately, we couldn't do that much because this local currency monster, we hadn't broken the back by then. So the landmark transaction that Shelter did in terms of the local currency bond that they raised in Nigeria is really landmark. It's really, and I'm not speaking for landmark real estate now. No. It's a great milestone, and it's really, if you look at it, the strategy they've deployed, raise for East Africa, do local currency there, do for French West Africa, do for Naira. I think it's the best strategy. We've been looking for it in the private sector. We've been looking for that kind of strategy from DFIs that purport to support us. And so that Shelter has been able to do this. It's really big for us, and that's what had made this transaction important to us, and that's why it's successful. Because if Shelter had come to us to say, "Oh, we have dollars, we want you to take it in Nigeria," we would have said no. The last transaction we did with Shelter was a dollar transaction. We were able to pay back and do all, but it wasn't without its own risk. We had to manage through a lot of sec. If you look at real estate, very frequent, people make the mistake to think real estate is like trading. So they analyze a real estate company or a real estate project in the way you analyze a typical trading project, or in the way you analyze a project that relies on annuity income that comes every now and then. But real estate isn't like that. It has a cycles, it goes through a development period, there's a gestation period, and then before you begin to now say the project is matured. And so if you are not able to look through that cycle, and you are able to draw inferences that reflect those peculiarities in that sector, you will frequently come to the wrong conclusions about real estate. And so, having a partner that knows that business inside out, that knows the industry inside out, that has the deep knowledge that Shelter has about every single market in Africa, is something that any serious developer must desire and cultivate. So that's why we came back to Shelter once they had a solution. Let me just, the second question that had to do with our projects, let me just give a brief introduction to Mixta. Mixta has done projects in 8 African countries. We've done in Nigeria. In addition to that, we've done in Senegal, we've done in Morocco, we've done in Tunisia. We've done projects in Egypt, in Algeria, in Mauritania in the past. But we have active offices right now in 5 of those countries. We've done close to 17,000 homes, products that we have delivered across these different markets, the largest being in Nigeria, where we've done over 9,000. We have a housing project in northern Morocco. It's called the SHAF. We did 7 phases of that project. One location, about 4,500 units of housing in that one location. So it's a city on its own in that location. In Nigeria, we are principally in Lagos, but we have land assets in Port Harcourt and we have in Abuja. Mixta is owned by one of Nigeria's largest financial institutions, ARM, and it's well diversified across different markets. Very good management, and like Kingsley alluded to, very good governance structure that we have. So what we've done in terms of the projects we've done, we've done hospitality. We have a different aspect that does hospitality, but mostly our deliveries are in the affordable housing space. We've done all the 4,500 units that I said we did in northern Morocco was affordable housing. 1, 2, 3 bedroom apartments. Each of them sold for a maximum of 25,000 euros when we sold them. None above that range. The one we're doing in Senegal, over 1,000 units in one location, that the Senegal project is near the major stadium in Dakar. The maximum price is about 30,000 euros. In fact, now that currencies are strengthening against African currencies, it's probably less than that now. And so we have a lot of experience in doing affordable housing. So it's no wonder that, given the history that we have with Shelter, we keep being. I was saying before that, look, what we have with Shelter is not. It's not a transaction. It's a relationship, and we value that relationship, and we intend to keep nurturing that relationship. In terms of what we've done, majorly affordable housing, but we have the flexibility also to do, in certain markets where, like Nigeria, for instance, people, because of the absence of mortgages, people progressively build their homes. So we have products for those people too who want to build their homes progressively. We can sell land to them in whatever form they want it, and then they can build their homes progressively and over time. And we have products that also cater to people who want to do rent to own. They want to rent before they own. So part of the thing that the shelter arrangement enables us to do is also to create those products. As you know, it requires for you to invest, and then you get the benefits later. Is to create those products. Now, in the other market where we are, which shelter is assisting us with, the dollar facility is going to create more than 1,000 units or close to 1,000 units of homes in 3 markets: Senegal, Morocco, and Côte d'Ivoire. Starting with Côte d'Ivoire, which has the largest chunk of $6 million that we are drawing down. So that market is really important to us. As you know, Côte d'Ivoire is roughly half of French West Africa in terms of size. So for us, it's an important market for us to invest in. And, we're going to be calling on shelter to even come there. The reason why it is important the reason why the dollar issue is more manageable there is that the currency is a lot more stable because it's pegged to the euro, and so it's a lot more stable and more manageable for us in terms of the risk that it presents. Now, in terms of the status of our projects, dates of completion, we have different projects. As one is completing, another one is starting, and all of that. The cycle we are running with shelter now should be like 3-4 year projects, but then we expect that under that cycle we'll have. Under that arrangement, we'll be rolling each of the projects into different projects and all of that. We're not the kind of real estate company that comes, develops, exits, moves away. No. Our projects continue. We have over 15 million square meters of land bank across the different markets where we operate. So we're not going to go away anytime soon. The challenges we're facing, wow. Big question. Well,
which one are you not facing?
Yeah. So it's the depreciation of the various currencies that we have in Africa in the last 1.5 years. It has been phenomenal in terms of the impact, and the impact is not just on demand; it's also on supply. Now, supply chain constraints, when the Ukraine war, I'll call it the war in Ukraine, when it started, no, I'm not going to go there. When it started, a lot of us didn't realize the effect it was going to have on everything. Apart from constraining the supply of food, we realized quickly in Nigeria that about 60, maybe more, percentage of the steel that we use in building and construction comes from Ukraine. The what you call it? Is it the ingots? The one that they use to manufacture the reinforcements and all of that, they come from Ukraine. And so because of that war, the price of steel has more than doubled. Apart from when you now couple that with the runaway inflation we're seeing generally, or you couple that also with the depreciation of the local currency, it's a huge impact on construction. And for a real estate company, one of the things that why do clients come to you? They want an expert to build their home. They want like a fixed price. They don't want to manage the risk of construction and all of that. And so as a real estate company, you are torn between giving that fixed price because your word is your bond and people must trust you to come back, and then managing the risk of that increase in cost generally across the board. And it's generally across the board. Even labor had gone up because everything has gone up, and so you have to manage through that cycle. What have we done? We increased prices where we could. Where people have not been living up to their contractual obligation, we've had to adjust our prices to reflect current conditions. We've had to redesign our homes. We've had to do products that respond in terms of pricing to the increase in prices and all of that. We've had to do all of those things. And then importantly, you've got to do some maths. If you're taking from shelter a loan that costs you, say 10%, I'm not saying that's what that costs you, say, 10%. And inflation is 13%. It's a no-brainer. Take the loan, use it quickly to deliver the home, and then get out of it. And that's what we're doing. And we're not saying you are subsidizing our business. So, those are some of the things that we do to try to mitigate the risk. What impact do our projects create? Well, quite a lot of impact. I spoke about this earlier. We're providing, the business we do, we can spin it anyhow. I mean, Kingsley can say all the beautiful things he's done. But it comes with a lot of challenges. And, you got to have a heart to be able to do the job that we do. It's not easy. That's why you don't have many people come and say they are doing affordable housing. To do the job that we do is not easy. It requires the support of the government. It requires the support of the people. You have to create, we have 22,000 or 22 million, housing deficit in Nigeria, for instance. Why are people not buying? We have to invest in things that create that demand, that turns that demand into effective demand. And until those things are done, those people who do the business may have a problem. Then imagine you're building 1,000 homes. Imagine that the margin on affordable homes is razor thin, maybe 10-15%. If you make a mistake in one of them, or the cost overruns in one of them, you repeat that 1,000 times. As opposed to if you were doing the premium development where you do 5 or 6 and you can adjust. So it's a highly specialized field, and it's not a field where you can just dabble into. So it's managing through those challenges requires the kind of companies that Shelter carefully identifies to partner with. And then you look at the quality of the management, not just that, you look at also the governance structure around those companies. These people who can manage their risk in a way that ensures that we get our money back, not just that, and the impact we want to make is there. So each home houses 4 people on an average. That's big impact. We create permanent employment. We create temporary employment. We move the economy itself. We create a market for mortgages. We create the capital market impacts that we see. And then we keep people in employment. Those are good impacts across the board. So what else can I say? In terms of future initiatives, funding initiatives with Shelter, we're open to the right type of funding arrangement that can help all of us to bridge this gap in affordable housing.